Sanjiv Bhasin joining in on the show. Sanjiv, hi there. Good to have you. Clearly, festivities all around as we're kickstarting the Diwali season. So take us through what the top Diwali stock idea is then, the Dhamaka bet.
Good morning, Awan. Wishing you and all your viewers upcoming very, very happy Diwali. What a week. 7 straight days of Dow gains. Nasdaq doesn't relent. It's 8 days of straight gains. First time in 2 years. Crude at 4-month lows. Bond yields at 3-month lows. All the makings for India to outperform. It's about time the elephants start to dance, but take it with a pinch of salt. I think 19,700, like I told you, is very much on the cards. Diwali or maybe a day or so prior to that. Results have been very, very smart. My top pick for Diwali is Idea. And I've been constantly saying if this stock is seeing re-rating, 33% of Idea is owned by Government of India into equity. It is never defaulted on a bank loan. ARPUs are rising. Their attrition rate is falling and their 5G is getting momentum. Just today you read tax areas or a tax refund is of 1,800 crore with interest is back. And I think the AGR pricing will be another positive. So from this Diwali to next, Idea at 11 or 12 can give you 22 to 24 rupees. That would be my top bet. Second would be Tata Power. I think Tata Power numbers as a discom are very, very splendid. You have to take two things into account. Margins are the highest in 16 quarters. And they had to make some adjustments for their Odisha discom, which they acquired and which is still partly loss-making. But the positive is the advent of the EV stations, which they are increasing by each quarter. So if I have to put my money, it would be Tata Power and Idea for this Diwali to next.
Okay, Tata Power and Vodafone Idea, those are the stocks that make the cut for the Diwali Dhamaka recommendations. But it's interesting that we were talking about the entire pharma space, Sanjeev, and just looking at the kind of returns that you've seen within this space. Do you believe that it's going to be a case of select stocks that stand out within the entire pharma space? Which would those be? Or do you think that we're going to see an entire sectoral move?
Yeah, so I think the whole sector has moved and, particularly the mid caps. I mean, look at Lupin's numbers. As a disclosure, Lupin is in our portfolio. We suffered a lot when it underperformed, but from that 780, 800 levels, we started accumulating. When we got positive commentary from the management that the worst in generic pricing is over, you must realize Lupin has a huge overseas reach. And once the, US market starts to perform, they will be one of the biggest beneficiaries. I still think Lupin is headed much higher. But Avan, if you wanted to participate in pharma, I still recommend go for two mid caps, go for two mutual funds which have a pharma thematic scheme. That is SBI and Nippon. They're both fund managers are very, 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 very apt in deciding the portfolio. And it is better to buy a basket now than individually because select stocks have been outperformers and you want to participate in the whole basket. As a disclosure, Lupin and Aurobindo are two which we have accumulated. We still think that there is upside in both those stocks.
Okay, that's quite an interesting idea coming in there. But Sanjeev, can't help talk about Pidilite. I mean, not just the earnings, the fact that they were sub-market expectations on most counts, barring, of course, the gross EBITDA margins, which are the highest in about 10 quarters. But this foray into lending business, I don't know if you've delved deeper into that. What are you making of this diversification?
So, I think the net outflow from the numbers I read will be something like 10 or 15 crores, which is not that big for a company of its size and the way it's growing. Pidilite has been a very, very big performer in the FMCG space. It's a slow and steady business. It has a huge market share where there is arguably hardly any competition. But, generally, people will look for, the naysayers will look for some excuse on that. I would look out for more commentary from the management as to why they had to do this, because that money could actually go in aiding their capex on a larger scale. And since we think that the business outlook for FMCG is going to be much more faster or much more better in the next half, given that the crude correction and other variables, we think that once we get more language from the management, we will. But we continue to have Godrej Consumer and Marico as our top picks.
Okay, that's the take coming on Pidilite, and of course, Godrej Marico is what Sanjeev is betting on from within the FMCG pack.
Sanjeev, clearly the QSR space, the hospitality space, the restaurant space, as you have flagged off time and again, seems to be in a sweet spot. What's looking good from a stock market perspective?
Well, Zomato is hitting new highs. I still like Devyani International. I think their EBIT came lower because of their branch expansion. Paytm and PB Fintech are two more names which we own, and we still think there is miles to go in this place. So Devyani International would be my topic in the QSR space. I think the brand and the positivity on the momentum which they have, particularly the market share they are gaining on Costa Coffee and the veg meals available with Kentucky Fried are doing extremely well. Their branch expansion has seen a little bit of it on the EBIT, but I think that will start to turn positive in the next 2 quarters.
You know, the interesting bit we got yesterday when we spoke to a few restaurateurs, and you see they were part of the show, is that the food delivery changed the QSR business. And you look at the profitability of some of the QSR companies. Look at the change in Zomato. It's been an exceptionally strong year for Zomato, but the QSR companies, including names like Jubilant Foodworks, they are going through a stress test, if I may speak, because the commissions which they have to shell out with Zomato, and Sanjiv Bhasin would vouch me because his son runs a restaurant here, I think is quite extraordinary. So whether it is Devyani or whether it is Jubilant Foodwork is not in QSR, it's more like food delivery. But the QSR space per se, in a sense, is now feeling the heat of high operating profit margin, higher rentals, and also the commissions which they have to really share with the food delivery app. Bhasin Saab, you are nodding. I don't know if that nodding is an indication that restaurants have to give a lot to food delivery, or that indication is a warning that food delivery companies, we will not give you that much now. So was that a proprietor or was that an investor who was nodding?
No, it's also a part proprietor, part investor. Luckily, Zomato was the first find I did. My son is not making much money, but Zomato, when I discovered the whole line of what Zomato was eating out, then I realized that Zomato is a win-win stock. But Nikunj, you have to take it with a pedigree that there is enough space to eat. You won't believe the seasonal effect plays out brilliantly. People still want that effect of going to restaurants. They are the compulsive Punjabis who want to go and eat where they want. And the Cricket World Cup has added because you want to watch your matches. And like I said, there is enough room for growth over here. You are right that margins will be hit because of the delivery side. But I think there is still room for expansion, given that millennial eating has picked up like how. You have no staff at home. It is all about ordering 4 times for 4 people in different ways and different meals. So that means volumes are going to make up for the slight bit of margin loss, but win-win for the distribution companies.
On that note, Sanjeev, I want to take time out to thank you. Good to have you as always, sharing your stock ideas.